Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Calls for soft landing grow. Well, after fears that the economy was beginning to unravel a bit here near the end of October, just a few short weeks ago, market participants and analysts are beginning to get comfortable with the idea of a soft landing. Now, this term soft landing has been getting thrown around for the better part of the past year and a half to describe the potential for inflation to slow back to a more reasonable level without causing a recession. At the moment, this appears to be exactly what is happening. Fed governors are becoming pretty unified around the idea that no more interest rate hikes are necessary, given an inflation rate that has slowed back near 3%. Many are now calling for possible rate cuts in 2024. Longer-term interest rates are now falling. For example, the 10-year Treasury rate has fallen from around 5% at its peak down to around 4.25%. Stock investors are sending share prices back to their highs for the year, expecting that this interest rate moderation is good news for the stock market as well. The real question is whether or not the abating inflation pressures are actually a sign of developing economic weakness under the surface that just has yet to fully manifest itself in future corporate earnings. In fact, most economic slowdowns look like soft landings right before they become recessions. So I would warn investors not to get too complacent ahead of what could be a challenging first quarter of 2024. For this week's featured insight, entry price matters. When the bulls are running and stock prices are rising, it can create plenty of anxiety for investors who fear missing out on potential gains. However, the idea that you would buy an investment simply because the price is rising is not a very sound investment strategy. It could be a good trading strategy, but that's a topic for another day. The price you pay for an investment matters. For example, many large company growth stocks are having a good year. But if you bought many of those stocks 2 years ago in November of 2021, you're likely still underwater on those investments, and potentially by a significant amount, depending on the company. So the time to get aggressive buying stocks is after a market pullback when most investors are running scared, not after a huge rally when everyone thinks that stock prices have nowhere to go but up. Looking ahead, Santa sightings everywhere. The Santa Claus rally is underway. Christmas is coming early this year. Now, the definition of the Santa Claus rally seems to be expanding. It was originally coined in 1972 in the Stock Trader's Almanac as the tendency for the stock market to rally in the final 5 days of the trading year and the first 2 days of the new year. Now investors are treating it as though pretty much any rally after Thanksgiving is attributable to Santa. And why not? Most retail stores are pushing Christmas the day after Halloween, some even before that. Now we'll see what December has to offer investors, but if the Santa rally got pulled forward into November this year, it's entirely possible that we could be setting up for some disappointment heading into year end, with the need for more than just the season as the reason for stocks to keep going up. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.